Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Monday, November 2nd, 2020 at 6:30 p.m. Central Time. Well, tomorrow's it. Tomorrow is Election Day in America. We're going to find out an awful lot in terms of how heavy the voter turnout is. The problem is we have a record amount of mail-in votes in America. In some states, they have extra time to count them. I don't know how you declare anyone a winner or loser tomorrow, but we'll find out as we watch the news. Thank God for one event. I'm so tired of the political ads. You know, if you live wherever you live in a local community, the ads are running. They're spending all the money that they have left on their campaign trying to win you over, when most of us probably, I know I have voted by mail, others will. The cities, and the big cities I'm talking, are preparing for chaos should President Trump be declared a winner. Now, I doubt that's tomorrow, but over the next few days. I know the Illinois State National Guard, they are in readiness for the Chicago area. I've read about New York, other cities. It's the same. A Trump win will get the anarchists out in the street. A Democratic win will not. In Chicago, they are boarding up all our shopping districts and so on, but not as much as they did in the March-April timeframe. That was interesting. I was looking at that today. Maybe they have more faith in the police. We'll see if that occurs. You're getting a rally back in the stock market as traders are positioning themselves over today and tomorrow. How do they want to go into the report for the first tallies that come in on the votes? You know, people are going to be up all night. I'll be going to bed at some point, waking up and hearing who won this or what are the projected winners. That's probably going to be the key word, projected winners and losers. In terms of what the market did today, well, you're fairly flat in the interest rate sector. The dollar's holding over the 94 level. The gold market's trying to get back up to 1900. The stock market in some cases has declined enough where the decline ended on the charts, and I'll talk about that in the financial market wrap-up. When we look at gold on a weekly basis, it came back and now it's under the 18-week average. This has been an important number, and the chart has a habit of getting under it and then making a way back up. So until the back of the market is broken, I wouldn't get overly concerned that it's a little bit down here. A number that I think triggers more of an upside is closing over 1950. And the market is right now at 1894.80. That's not that far away. It's a $25 move. It's a one-day move in gold, as you well know. But that could trigger, especially on a weekly basis, because this is a weekly chart, that this decline has run its course, and then we'll see what the market wants to do. The market is of the opinion that a Biden win sets off an inflationary round. It is of the opinion that it's bearish the NASDAQ. It is of the opinion that it is bullish the traditional, the paper stocks, the manufacturing stocks, the old-time version of what was going on. You don't have to agree with it or not, but just watch financial TV. You get a pretty good play on what the analysts are thinking. When we come to the daily bar chart, it's an awful lot of attempts at, number one, you haven't gotten back under the 1850 level that you made in September, but you haven't broken out to the upside either. The market still has a pattern of lower highs and lower lows. Therefore, the swing line is in a downtrend until you get over 1913.80, and you just saw me talk on a weekly close. You want to be over 1950. So that's starting to get some importance. The resistance in the market on a daily chart is, remember I said the 1900 level? Well, I just want you to look. You've got the 100-day average in the 18. Now, something bearish happened tonight. I want you to look at this market. This is the close of business Friday. On Friday, the 100-day average is still underneath the 18. Today, and that is Monday, you had the 18 still over the 100. For the moment, you're back under it. Now it's whipping back and forth here. Very important, but it gives you an idea how important this 1905 level is. Obviously, to me, the key is get over 1913.80 or fail against that number and start down again. It's going to be one of the two. When I get over and look at Bollinger Bands, the market made an attempt, and let's come over here to this day. You had 1 day out of the market, 2 days, and both at the bottom part of the range. That was a downside breakout, in my opinion. That's how I define it. And then the market has been coming back since then. So far, if that's the downside breakout, you don't want to get back over this high right through here. That is what I'd be looking at. And while there's noise in the chart, just remember, you still have a pattern of lower highs, lower lows. You're under the 18-day average. The resistance is 1904, but the election, not the chart, is going to take over this market. In terms of the slow stochastic, the market is no longer in oversold territory. We define the market as being oversold with any reading under 30 by one of the numbers. Friday you had that. Today the market rallied back and got out of it, and you're well out of it tonight. So you have a market that if it were a normal, not election time, I'd be telling you the pros are waiting to sell this market. They'll have stops over 1913. They'd have it at 1913.90, and they'd be looking for 1871.10. With an election at hand, I wouldn't stick my neck out. The gold-silver ratio still favors the gold. And the reason is when you're over the 18-day average, it means the market's going up and you need more ounces of silver to buy an ounce of gold. So you're still there. You've got to get under 78.03 to give silver the benefit of the doubt. The silver market, if we come back to this chart, on this day closed under the Bollinger Band at the bottom quadrant, but not the next day. Silver did not get the downside breakout that the gold market did. We've been getting a bounce over the band and trying to get back to the 18-day average for resistance. The trend is down via the fact that we have lower highs, lower lows. The market has found support at the lower Bollinger Band, unable to stay under it but 1 day, has climbed back up through the 100-day average into resistance at the 18. In the copper market, the battleground, I think you see it crystal clear here. Look at the 18-day average of closes. You see how the market just wandering back and forth against it. That is the key to the market. You got high enough today, which is Monday, to get over 309.40. You got to 309.65, ending the pattern of lower highs, lower lows. The market was unable to make it to the lower Bollinger Band. Not a surprise, because I think this market is on the overall basis, including the weekly chart, still bullish. Get back over 309.40 again, and on a close, and you need to close over that, then the bias turns up. Right now, you had an outside day up. You set up a test of the lower Bollinger Band of today's low, and today's low was 302.80, if that is taken out, right? But what if you don't take that out because it's an outside day up? Then the question is this enough power to kick the market and get more short covering going? I don't see anything on the chart at this point that sets up a pattern of higher lows, higher highs. So I can see the trend ended on the downside. It didn't on the daily chart begin an uptrend. The platinum got down right where it should have found support, the lower Bollinger Band, and called it a game. You had a big outside day up today. If you took a look at the manufacturing reports that came out today, America's manufacturing was right through the roof, really exploding. I don't know what the new COVID cases are going to do to that. We have to all be concerned because there's more and more shut-ins and lockdowns taking place. If you're watching Europe, they're generally about 2 weeks ahead of us. Today in Switzerland, they started their shutdowns. So you are getting it in more and more areas. I just want to warn you. And as those shutdowns come, they're talking some of them could last to January. What if that happens here? So you've got to have and keep your eyes open and be worried about all this. But that's what kicked the market. It's still very much in a downtrend, but very much oversold and has hit downside targets. In the palladium, the first challenges, plural, of the 100-day average and lower Bollinger Band were the support zone. It's in a downtrend that, like the platinum market, has hit its downside targets and it is oversold. And in the dollar, going into the election, you're right up at the spot where I think the pros took their money. Why? If you look at today's high of 94.31.5, what do you hear me often say? First off, when you hit a Bollinger Band, I think the pros are coming out of a position. Second, when you hit the combination of the 100 and the Bollinger Band, which you did in a 48-hour period, I think you're giving them all the reason they need to say, okay, we've gone from the lower band to the upper band. Guess what? I'll let all of you crazy people, you trade the market on every word that comes out on the newscasts. I'm going to take a break, have a glass of champagne, and watch the election. That's what I think is going to happen. Tomorrow's a day where if you're in the markets, you probably should be looking at pivot points, because I doubt that you want to position yourself for tomorrow. That, just understand, if your position's wrong and some news thing comes out, the market could be going like that on you. You just don't know. We're going to find this out in normally thinner trading anyways. Right? Nighttime sessions, not as heavily traded. Tomorrow could be an interesting night with more volume than normal. But I'll be looking at pivot points during the day, because I think that's what the traders are going to trade off of. They'll look at the support and the resistance zones. Remember the pivot point theory. You're finding a midpoint in the market and then sells above, buys below, and you're trying to tie it together with momentum of slow stochastics. It is meant to be a day trader tool. It is not a positioning tool. So on a day like tomorrow, I can tell you, this is probably going to be in play for the people that trade those mini stock index futures. The metal traders will be there. I don't think you have to worry so much about the soft commodities along with the meat markets and the grains. Everything else is in play for a wild day, actually a wild week. If you looked at energy prices today, I'll talk about them in a minute. They had one heck of a wild time, and I was looking at the pivot points in them. They were so interesting. It's a 3-part free series. It gives you an idea how I teach even in my charting course. Just go to our website, look at free offers, sign up for it there. We'll mail you everything you need by email, of course. You can call my staff. They'll be happy to work with you. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.